Hey everybody, welcome to Trading Capital Exclusive Analysis. In today's video, we're going to be discussing the energy market, natural gas and oil. One of my favorite trade setups right now is natural gas. This chart action and price action is looking poised to break out. What I'm seeing technically is if you draw this flag pattern from the low to the high, you can clearly see that natural gas is on the near-term precipice of actually breaking out of this bull flag. So here you have your bull flag, which it has broken out. We haven't confirmed the breakout, but it's looking very, very strong. And what I mean by that, this breakout is specifically seeing two dips, two sell-off days, tagging the day today. The sell-off day today actually tagged the short-term 20-day moving average, and it got bought right back up off of that. So that's a very strong sign, and it makes it more probable that this flag pattern is likely going to break out to the upside. And then another thing that I'm watching and observing now, if we actually erase some of these trend lines over here, these flag patterns, if you look intraday at the 4-hour chart, and let me just blow this up a little bit. So on the 4-hour chart, you can actually see that there's a key technical breakout that has occurred and is on the near term, trying to continue its upside momentum. This little technical breakout is an inverse head and shoulders. So you have your left shoulder, you have your head, a little micro right shoulder over here, which it has broken out and confirmed. And this upside move, takes you basically pretty much up to about 294. And then there's potentially even a bigger inverse head and shoulders pattern that is also trying to play out here, where you draw the neckline like this. And today there was an attempt right over here on this candle at breaking out of that neckline, and it got sold right off into. However, that just means more consolidation is occurring for the next attempt at breaking out. And if you break out of this inverse head and shoulders, where you move this neckline or this right shoulder up to here, that's a bigger right shoulder, and that gives you a bigger move to the upside. It actually takes you all the way to about 305 on the chart without any overshoot. So natural gas is shaping up to be pretty interesting in my opinion. I do think that there's a lot of potential upside if you play it correctly. And full disclosure, I am playing natural gas on the long side as of now. And if you look at some of the underlying natural gas stocks like AR is interesting because it's had a few attempts at trying to be sold off in this consolidation, but it's still maintaining and holding its high consolidation range. So you have multi levels of resistance here, and this is a huge level. There's 4 major areas where natural gas hit support, had a major breakdown, hit resistance, sell off, and now you're trying to attack that 5th level again, and that level has been weakened once, twice, and the 3rd time is generally the charm. That is typically the saying. And right now it is looking poised to move higher. The only catalyst is earnings. Definitely be mindful that it has earnings tomorrow on Wednesday the 26th, but I think that considering natural gas in the near term precipice of breaking out of its stage 1 basing formation, it may mean investors are becoming a little bit more optimistic about the actual energy space as a whole. And it does help that the XLE is also attempting to break out here. It also is looking at the energy market, the oil market itself, breaking out of a 13-month downtrend as of today. So that's a potential technical breakout. We need to see some confirmation and follow through on oil, but it's looking poised to move higher. On that note, please give this video a big like down below how I'm playing specifically on the trading side of natural gas, because once this consolidation range breaks, there's not only an investment or swing trade that can be made, certainly an investment down at these levels, but some of the levered ETFs move very wildly on momentum intraday, and you can certainly catch Boyle on the long side playing it levered as well as KOLD, but position sizing is critical when you use these levered ETFs. And based off of KOLD looking very toppy here and putting in bearish consolidation to move lower, it's looking much more likely that nat gas finishes that potential breakout move to the upside before it starts establishing a new trading range. On that note, please give this video a big like down below, subscribe, and visit our YouTube channel daily for more additional insights. Take care.